We also have electronic banking. Now, banks have been using EFT, electronic funds transfer, for some time. And there are many publicly accessible automated machines around the world for us to be able to withdraw money from. Here in the U.S., we'd call them ATMs. Now, the risks associated with banking didn't really get raised through electronic banking, but e-banking does modify some of the traditional risks. From the perspective of the auditor, the main issues are going to be strategic, operational, and reputational risks, which are now going to be directly related to threats on the data flow. And if you think about it, I've had friends all the time ask me, well, not as much now, but when electronic banking and electronic funds transfer started becoming, the emerging technology, they used to tell me, is it really safe? And I'd say, look, what I just mentioned, right, having risks or controls put on to control the transfer of information, right, the data flow. We know that if that gets broken, that's going to cause an issue of reputation to the bank. So they're going to make sure it's secure. But here's what I told people. I said, look, as long as you're doing this with an encrypted session and following standards and procedures that we have, I think it's safer than when you're at a restaurant and you hand a complete stranger your credit card. They walk off for 10 minutes doing whatever they want with that credit card, hopefully just charging you for your meal, and bring it back to you. At least here you know it's going directly to a specific place, again through that authentication with certificates, and that it was done in an encrypted manner so that hopefully nobody else, and if it's encrypted, I'm almost going to guarantee you 100% that the other hackers wouldn't be able to intercept that information. In fact, most of our risks are in the way in which the information is stored at the vendor site. There are three essential elements regarding risk management of these new technologies that we want to look at as we're doing our audits. Number one, remembering that risk management is ultimately the responsibility of the board of directors and senior management. They're the ones responsible for managing the bank's use of electronic banking and all of its related risks. Again, the liability is always at the top. We need to examine the technology that's responsible, and the fact of getting it examined is the responsibility of the IT senior management members. When it comes to measuring and monitoring risk, it's the responsibility of the members of the operational management to make sure that it's done. Well, with the rapid change of technologies and service innovations, that can really intensify the need for an ongoing risk assessment when we're talking about these challenges we have in e-banking. We have the transactional e-banking websites and their associated retail businesses, and they're typically still integrated with their legacy computer systems. And this type of relationship should reduce, hopefully, the chance for human error and fraud that we find in the manual process. But e-banking increases the bank's dependence on the IT part of their organization, and that then increases the complexity of many of the operational and security issues that we deal with in IT. The common access network that we use is the Internet, and by its very nature, it's open and accessible from anywhere in the world. And since our messages are being routed through this open network, it magnifies the need for having security controls. Now, there are 14 controls that we can look at. They're divided into three different categories. And we're going to talk about them by category. The first category is the board and management oversight. So what do we need from them? We need them to make sure that they have an effective management oversight of e-banking activities. We have to make sure that they have established a comprehensive security control process and that they have comprehensive due diligence and management oversight of any outsourced relationships they might use. In the category of security controls, we have to make sure we have a method of authenticating the banking customers, non-repudiation accountability for the transactions, a segregation of duties. They need to have good authorization controls, be able to show that they're maintaining the integrity of the transactions, that they have established clear audit trails, and that they are storing the key bank information in a confidential manner. The other category we have to look at is the legal and reputational risk management. That means we have to have the appropriate disclosures for banking services, privacy of customer information, business continuity and contingency planning to be able to maintain availability as well as plans for the incident response. E-finance is changing the way financial service industries are operating, and it enables new providers to be able to merge throughout the country. Now, there are some advantages to electronic finance: lower costs, increased breadth and quality of services, widening across financial services, meaning they get to do more in financial services. They also have what they call asynchrony, which is saying that these electronic finances are time decoupled. Yeah, that means I could schedule a payment for next week, right? And they're also atopy, which is location decoupled. I don't have to go to a branch. Part of that is the payment systems. Now, the parties involved in the payment systems are the issuers and the users. The issuer is the entity that operates the payment service, and they hold the items that the payments represent. The users of a payment service generally have two functions. That is, they make or receive the payments. The electronic money model has an objective to emulate physical cash. Now, this can be done by creating digital certificates, which can be purchased by the user to redeem with the issuer at a later date. Kind of sounds like what we now think of as an old-fashioned gift. The electronic checks model works very well in the real world because it's easy for users to understand. Basically, a user can write an electronic check that's digitally signed as an instruction to pay. The advantages of the electronic check systems are things like it's easy to understand and implement, the availability of electronic receipts, allowing users to be able to resolve disputes without involving the issuer, and no need for the payer to be online to create the payment. The electronic transfer model is perhaps the simplest of these three payment models because the payer can create a payment, transfer instruction, sign it digitally, and then send it to the user. Now, as we talk about the electronic funds transfer, this is another method of payment that's based on the internet or some other electronic communications. The hope of EFT is to lower the costs that are inherent with the business process. Basically, all this is an exchange of money through telecommunications. And EFT refers to any financial transaction that transfers a sum of money from one account to another. In many ways, this is your automatic deposit of your paychecks into your accounts. Now, there is a potential that you're going to have a high volume of money that's being exchanged electronically through the EFT. So the security and EFT environment might include a method which the customer gains access to the use of a plastic card and a PIN to be able to help as part of this authorization in the payment process. Now, I know you're all saying, hey, that's an ATM. Well, yeah, that's one example of perhaps of the transfer. Usually, though, that's funds transferring out of your account and into your hand. We're more or less talking about going back and forth. Now, the auditor should review the physical security of those unissued plastic cards, as well as the procedures they use to generate the PIN numbers, right, the personal identification number. Now, as we look at the security for this EFT environment, we have to make sure that the links between the equipment are tested to be reliable, that each party is using a security procedures that are reasonable. There should be some guidelines for the receipt of the data, and that should include date and time of the transaction. The receiving party should immediately transmit an acknowledgement. We should make sure we're using data encryption standards. And the standards for dealing with unintelligible transmissions should be made. In other words, how do we deal with that? Do we report it and leave it for somebody to look at, to approve? Do we reject it? Do we deny it? But we have to have standards about how to deal with those. Of course, we also have to look at the regulatory requirements for the enforceability of the electronic data that's being transmitted.